Hello, everyone, and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that a like and subscribe. As you guys know, it's the only thing that I ask. Now, sorry, yesterday I actually was supposed to record and post a video, but I actually fell asleep on the couch. I was really tired and ended up not doing it because of that. So I do apologize for that. As you guys know, I always like to make videos during red candle parts of the cycle. As you guys know, I like red candles almost as much as the green ones. I know I'm a bit of a crazy guy, but you know how it is. So, what have we been seeing? I have a lot of questions in the comment section, which is good. Please keep it up. I have some comments also challenging me, which I also welcome. As I've said before, if I get anything wrong, feel free to destroy me in the comment section. I really appreciate it. Just don't insult my family. But you can insult me, that's fine, I don't mind. So, the bonds keep on being under pressure. That's to me the biggest concern in this market. I think until that bond market stabilizes, normalizes, the Fed comes and gives a clear guideline on that, I think we're going to still see some more turbulence. Stocks have been also a bit under pressure, as I've said before. If the bond market starts cracking, then all the other markets start cracking. I don't care which markets there are. Everybody looks at the Nasdaq. Everybody looks at this. No, look at the big league. Look at the bond market. I look at the bond market. I'm going to say this again. I know that for people out there that follow me for a while, it is really boring, but I really need to bring this up to the speed of the new joiners, which I hope there are a few. The bond market is the big daddy. I don't look at the bond market because I'm an active buyer, investor, trader of the bonds. It's because there's no way, in my view, that the bond market can be collapsing and all the other markets flourishing. Now, you can have the bond market going down quite aggressively, quite fast, for a couple of days, maybe a week. But then, if you look at the chart, the equities and commodities, etc., play catch up, and crypto as well, play catch up to the downside very quickly to the bonds. So that's why I look at them quite carefully. Now, there was a question about how did the economic data factor into these matters, into the performance of the market. So what you need to understand is the markets are driven by liquidity, by creation of currency, which we call money. Dollar units, more dollars, more euros, more Swiss francs, etc. And there are two ways that this is done. Either via budget deficits by the US Treasury, for example, or rate cuts and purchasing of bonds by the central bank, or like 2020, a combination of both. Whenever we have good news, over expectation, or beating of expectations in the job market, for example, and even if you actually read the report and the report is completely garbage, but let's put that aside now, because what matters is what the market thinks of the report, not what I think about the report, because I'm not the market. So if that's all positive, the thinking is, oh, less rate cuts, which means less friendly towards stocks, risk assets, basically. And if inflation comes hotter, it's the same principle. Now, I've mentioned before, and this is quite accurate, inflation has very little to do with interest rates. But the market and the central banks are convinced that it does. So, for example, when I say this thing, which country in Europe has the lowest inflation? Switzerland. Which one has the lowest interest rates? Switzerland. Oh, but I thought that high interest rates, low inflation. No. Japan had 0 to negative interest rates for 30 years. Their average inflation is 0% over that time span. The Fed's balance sheet went from 800 billion to 8 trillion, and the average inflation was 1.5%, which is historically low for the US. Over more than a decade, by the way. The Europe, when Draghi announced the infinite QE, and basically interest rates were zero and negative for a decade, and still now they're buying bonds, and still now interest rates are lower than the US. The average inflation rate in the Eurozone was, during this time period, 1.1%. China has been printing money and cutting rates non-stop. They are fighting deflation. So, but people, for some reason, remain convinced that high interest rates means low inflation. And as I've said before, it doesn't matter what I think, it matters what the market thinks. So if the market thinks, oh, economic reports are a bit better than expected, but inflation is also hotter than expected, then the Fed won't cut rates. That's the expectation. Now, my argument is interest rate expense is already the third largest item of the budget. And at current rates, in January 2026, which is 12 months after Trump's inauguration, then it will be the largest item of the budget, larger than Social Security, larger than Medicare, larger than the military, larger than everything. And by 2026, that will be close to $1.8 trillion at current rates, which is about 35 to 40%, around 35% of the entire tax revenue of the United States. Corporate, people, wealth, capital gains, income tax, all taxes. And by 2027, it would be more than 50%. So there are two ways. Either they cut rates, which is the easiest, or these budget deficits will explode to basically pay the interest on the debt. Any scenario, money gets created, currency gets debased, asset prices go up because the currency is worth less. In my opinion, I mean, unless there's a magical formula, which I'm not seeing, this is how it's going to go. This is why we had high interest rates throughout this period, and the stock market keeps making new all-time highs, because Biden made the record of adding debt to the national debt in one single term of all time. So he created more currency on the treasury side, despite to compensate for the Fed's lack of liquidity pumping. And here's the funny thing: when the Fed stops creating new dollars, and they all come from the budget deficit, the dollar index goes up quite a lot. Why? More than half of the debt outside the US is denominated in dollars. Who can create dollars? The Federal Reserve. That's it. Other countries cannot. So at some point, when they need to repay these debts and refinance these debts, they need to go fetch dollars. But these dollars are no longer being created because the Fed has stopped that money train, right? So everybody is fighting for fewer and fewer dollars, which means the dollar index goes up. That's why it's at 109. That's why it was at 120 back in 2022. It's not because the world loves the dollar, it's they need the dollar. And that's why, Peter Schiff has been predicting the demise of the dollar, I think, since 2010, when the dollar has rallied 24% since then, or 25 or 26% since then. Of course, he's not going to acknowledge that, but that's a different story. Okay. Now, going into the crypto market, I thought that the correction could have been largely done in December. So as you guys know, this has been the front-running cycle, right? So whatever is supposed to happen happens, but tends to happen about 2 weeks ahead of time. So January, if you look at January 17, there was a big correction in January as well. And usually around this time as well. And there was actually a much larger correction at the time. I think it was around 32%. So there's a possibility, yes, that Bitcoin goes into the high 80s, very low 90s again. And that is purely in line with the cycle. Now, what I'm most concerned about is time rather than price. Time is more important. So if this would be happening in April, for example, I would be more concerned. I would be very, very concerned. In January, I see very little difference from January 17 or January 2021. If you actually look at the charts, they're very, very similar. Now, what I got wrong here, I think Fed Powell kind of screwed me here a little bit. Ethereum was around 4,300. I thought Ethereum's going to put in a quick new all-time high before the correction, maybe 5,000, 5,200, but Fed Powell decided to come a bit earlier and screw that prediction up for me. Now, I know I said by mid-January, so we're still not there, but I don't think we're going to get there. As I've said, Ethereum 5,000 by mid-January was a low. It was on the bottom 8 of my 12 predictions, so I'll probably get that. Almost certainly I will get that one wrong. As I've said before, I will repeat it again. If I get the first 4 right, and the bottom 8 wrong, I'm going to be extremely happy. If I get the bottom 8 right and the top 4 wrong, I'm going to be extremely unhappy. So that remains the case. It's always very consistent on that front. But in summary, I haven't seen anything to cause me very big concerns. There was a comment of someone saying, Boppy is now half the price that it was when I spoke about it in a certain video. And it was a bit like trying to make I gotcha moment. I disclose all my lottery tickets in this channel, the successful and the unsuccessful ones, and I say my point of entry. My average cost in Boppy is 550k. So I spoke about it at 600k market cap and then at 500k market cap where I reinforced my position. So my average cost is around 548, let's call it 550. Even after a correction like this, I'm up almost 50%. So that's my big failure, according to the comment from this person. Yeah, I will take a plus 50% after a massive correction any day of the week. Now, I can always get, and I will get, and I've already gotten lottery tickets wrong. And I've got a few very, very correct, like Hoppy and Andy in particular, which already paid not only for all my lottery tickets, it already paid for all my investment in crypto this cycle. Coming from an $800 investment and $1,000 investment on each. So $1,000 and $800 investment, I've already paid my entire dozens of thousands of dollars initial investment, which is the point of a lottery ticket. The point is not to get 100 lottery tickets correct, is to get a few correct. When you lose small. When you win big. In that context, by the way, I experimented a little bit with meme coins on Base chain. I will put them in the description as I always do, which was based Kekius Maximus at 95k market cap and Base Tyler at 440 something. Don't quote me here, 443k market cap, something like that. Extremely high risk. I put $500 on each. I expect to lose all my money on this one. I have no confidence on my ability in Base chain. I just decided, let me give it a little shot. Let me see how it goes. And that's what I did. Okay, so zero expectations on my behalf. Actually, I think, if you ask me, Sheldon, do you think you're gonna make a lot of money on this one, or do you think you're gonna lose a lot of money on this one? First, I'm not gonna lose a lot of money because I haven't put a lot of money. Secondly, if I had to give a probability of losing all my money, I would put it at like 90%. Of winning, about 10. But if I win, I may win big. Who knows, right? So I'll give it a shot. I mean, why not? What do I have to lose? Nothing. I mean, okay, I will lose $1,000. Will I live under the bridge? No. So I can live with that. So in summary, the cycle is continuing. There's nothing really to get concerned about it, in my opinion, at the moment. One thing that's also important, this is how so much fun how the market punishes people. Everybody was talking about selling early in the Q1 and so on. So you get this correction immediately as people start saying this, which a lot of people are now being forced to sell because they're afraid, oh my God, maybe the top is already in. That's it, we're finished. Let me sell right now because I won't be able to sell quarter 1. This is good. So we get rid of all these people. They go away. The PTSD people need to start going away, which is good. And once again, there's nothing really materially different versus other cycles. So what I wanted to also tell you is, so as I've mentioned before, I still think that Bitcoin will top somewhere late September, first 3 weeks of October. I'm looking particularly at late September, 6th of October, and 20th of October. So those are the 3 dates that I'm looking very carefully. Let's see if we get there. I think Bitcoin will finish the cycle somewhere between 242 to 276,000. And then you have an altcoin season in Q4, just like in 2017. There's a lot of resemblances with 2017. Yields are going up, just like in 2017. A lot of fear about the tariffs being inflationary, just like 2017. A correction in January, just like in 2017. Trump is the president, just like in 2017. So as I've said before, if he won, we would get a cycle closer to 2017, in my opinion. And so far, it seems to be the case that we're getting a 2017 kind of cycle. Now, I've said this before, I'll say it again. Fundamentals precede price, not the other way around. So what's happening is, instead of price, so first narrative, price after, the reality is the world is driven by price first and narrative afterwards, meaning price is up because of A, B, and C, and D, not because we have A, B, C, and D, then the price will reflect later. No, that's not how it works. The color of the candles will tell you the news. So for example of fundamentals. The UAE has $40 billion in Bitcoin and accumulating. The FTX creditors just start getting their money. US dollar, 16 billion, not BTC, in dollar, getting back their money. Starting to get their money back now. Trump's going to be elected. We're going to have finally favorably SEC people on the crypto space. The vice president loves crypto. Trump's son loves crypto. Trump is buying altcoins. I mean, it's kind of a dream if you would go back like 3 years in time and say, oh, you're going to have a very friendly, openly speaking president. The DOJ, we just found out that the DOJ was cleared to sell $6.5 billion of Bitcoin late last year. So probably that Bitcoin's already been sold as we speak. Once again, people get this wrong. Oh, but that's bearish. No. If Trump only moves existing Bitcoin to a wallet and promises not to sell it, there's no buying pressure. Granted, you remove a selling pressure feature, but you don't get a buying pressure. If the DOJ and the Biden administration decide we're going to sell as much Bitcoin as we have to basically punish Trump when he gets into office, like in spite, that will force the US to acquire Bitcoin, which is going to be good for us in the future. So people always get this backwards. Like the Germans, everybody was very bearish when the Germans were selling at 55K. Remember that? And what did I say? They're going to be victim of memes very soon. What's happening? They're being victim of memes like 6 months later. It's the same concept. Very little difference. Mt. Gox coins are all distributed. Okay, so we remove that selling pressure as well. The US government has sold apparently at least half of their Bitcoin. That's also bullish. Germans have no Bitcoin left. It's also bullish. So what I'm trying to say is that all these fundamentals are here today. But there's going to be a time where the price is going to be, I don't know, 150K Bitcoin in my opinion. Okay, this is not financial advice. This is, I think it's going to happen. 150, 200K, right? Then people, when we get there, will say, of course it's 150, 200K. You have the US, you have the SEC, you have Dubai buying, you have this buying, you have Chinese buying, you have Russia accelerating accelerating legislature to have their own Bitcoin reserve. Yeah, that's true, but it's all happening now. But you're not paying attention because the color of the chart is red. If it turns green, all of a sudden the same fundamentals that are already here right now will become much more important. And I want to pivot this to a final point that I wanted to make in this video. Understand media, mainstream and YouTube finance related, they are all the same, or they behave very similarly, okay? The news tell you things in an entertaining way to get your clicks or you turning on the network on your TV. And they respond to whatever is happening in the market. Example, I'm talking about market media, let's say, market reaction, S&P, blah, blah, blah. If the stocks are red, they'll say, I've seen this so many times, it's crazy. The S&P is red because of rising tensions in the Middle East, right? And then we hit a big support area, we put in a big reversal, and the stocks actually finished the day on the green. So my question is, what happened to the rising tensions? Did they just evaporated over over 5 hours? No. The color of the chart was red, so they came up and put in the news. Oh, it's red because of this. And if it's green, it's the other way around. Oh, it's green because there's no longer tensions about the good. But then we hit a big resistance level and we sell off. And all of a sudden, all the tensions came back roaring again. Don't take this the hard way. They are selling you what you want to hear. Essentially, that's what they're doing. And the economy is a bit different. It's a bit different, I'll tell you why. The economy, they want to play ball with the government. If they say the economy is garbage, they're pretty much going against the government. Now, I'm talking about CNBC in particular. The other mainstream news media is very clear. It's sports. You have your team, I have my team. My team does everything right and nothing wrong. Your team does everything wrong and nothing right. We get it. But here comes CNBC, which is supposed to be related to money, markets, etc. So regardless of who's in power, they have a vested interest that things go well, right? So what happens? They will tell you things like, oh, the economy is very strong, the consumer is very resilient, a lot of jobs being created, the economy is getting hot because it's so strong, everything is so strong. Obviously, you know it's fake. Why do you know it's fake? Trump won the election on a landslide. What was the number one reason why people voted for him? The economy. So if the economy is so great, why the other party won in a landslide? Due to, number one, the economy. So this is what I mean by narrative versus reality. Okay? This is why I talk about the three economies. You have the real economy, which is garbage. You have the real economy portrayed by government reports and the media, which is very strong. And you have the financial economy, which is extremely strong because it's linked to liquidity and currency debasement and has nothing to do with the real economy. Except if you have a big swan event, like a big war, big pandemic, and obviously there's a connection, big corporate failures, but Microsoft goes bankrupt, or something like that. But apart from that, no, there's very little connection between even the three of them, but particularly real economy and the financial economy. And this creates two types of audience. So the audience that reads that the economy is doing great usually are on the wealthier side. They have the assets, so their assets are going up. So they actually feel the economy is really, really good, which is not. And then the real economy, people get pissed because they're saying, look at these mother effers, saying that the economy is great, and look at my life is a complete mess, it's a disaster, I have 3 jobs, I cannot feed my children, I have to move back with my parents, we have 3 generations living in the same house, blah, 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 all this kind of stuff. So YouTube comes, and Twitter, but YouTube in particular, comes and fills that void. Oh, we're gonna say that everything is terrible and there's no hope. This is why you have channels like KitCon News, David Lynn, George Gammon, Stephen Van Meter, Harry Dent, Peter Schiff, Jim Rickards, Celente, Kiyosaki. Everything is about to collapse all the time, everything's about to crash, everything's about to go to zero, stocks are about to drop 90%, there's going to be food shortages, there's going to be revolutions, there's going to be this, burning buildings, all of this kind of stuff, everything's going to go to zero tomorrow. So they go to the other side of the pendulum. They go to the side of the world is coming to an end. Now on the market side, they are very much aligned. If Nvidia goes up 10x, they talk about Nvidia. If this coin goes up 10x on YouTube, then, this another coin is going to do 10x. If you buy these 10 coins, it's going to go up 10x, blah, blah, blah. The idea is, the reason why YouTube is 90% fear corn with a P and 10% kind of balanced analysis is because they are filling the void that the mainstream media is leaving unfulfilled. Now, this is particularly dangerous because there's new investors coming into the market every single day, and they don't know anything about anything. So they see this Peter Schiff, Harry Dent, David Lin programs, Kitco News, and this collapse, and that's going to collapse, and that the other is going to collapse, and then they also have a little bit of a fantasy after watching The Big Short of being the next Michael Burry, and one day telling their children it wasn't easy to become so wealthy betting against the American economy, something like they have like this fantasy in their minds. So it fits very well into this. But understand this, there's a reason why when you see people like Harry Dent or Peter Schiff going to David Lin, they are never confronted about their track record. You see, Harry Dent has been predicting an 80% market crash at least since 2010. We are in 2025. We had a massive bull market. The asset that we recommended, TLT, is the only asset that I know related to the US stock market which is down today versus 2006, versus inception. I think that ETF, if it's not down versus inception, which is back like in 2002, is very, very close. So, but they're never confronted because they bring in the views. So they are trying to get the views, trying to get the clicks. Very important to understand. Why does my channel doesn't do any of this? Because I don't need your money. It's really that simple. I don't sell you anything. There's no private anything. There's no pay me a fee and I'll tell you my secret trades. I've got 200x's already this cycle. I've talked about them from the beginning when I got in and the price that I got in. I've talked about my previous success and failure in some of the lottery tickets. I am very convinced about pulse chain ecosystem, which everybody hates right now. But I get the feeling that everybody's going to love later. But that's my opinion. And I'm here to broadcast this journey. But I go out of my way to make sure that I don't tell you, that I don't sell you anything, that I don't try to convince you to join any program that I have here, a secret program. No watch list or nothing like that. I am the only YouTuber that you're probably gonna see. There was one time I had a live stream and I had the super chat, and somebody gave me a $20 super chat, and I say, please don't do that. Like, if you're gonna give me like $1, $2 so I can go buy a coffee, that's fine. Like, okay, the little token of appreciation. $20 is far too much money. Please don't donate those amounts of money. Have you heard any YouTuber saying this before? How many YouTubers say, please don't give me high super chats? I'm yet to find one. And that's also the reason why I activated my monetization, because it seems that my videos get more widespread than when I have it turned off. But there's a reason why I never finished the connection to my bank account, etc. Because to this day, and I'm willing to sign an NDA with anybody and we can get it sorted out. To this day, I've been monetized for over a year. I got 0 checks from YouTube, 0 payments on YouTube ad revenue. And there's a reason why. Because I don't need that money. I do this purely as a hobby and purely for fun. I'm going to get some things right. I think most of them I've got correct. And I'm going to get some things wrong. These things have also big distinctions in terms of importance. If I get the crypto cycle 80% correct, I'm going to retire. If TLT ends the cycle at 98, ends 2025 at 98 instead of above 100 as I predicted, it makes 0 difference to me. See what I mean? So these things have different levels of priority. But in any case, we covered a lot of things today. Thank you very much, guys. I really appreciate your support. Don't forget, drop that like and subscribe. That is something that I ask, the only thing that I ask, and I'll catch you in the next one.